Besides these issues with Evergrande that we're dealing with, we've also seen a notable slowing in retail sales in China around the Delta variant. So we've seen big international luxury retailers last week, LVMH, for example, Richemont, they all got hit on this concern. How do you feel about the prospects for the Chinese consumer? Because that's the main argument for investing there. This is the biggest consumer market in the world right now.
Listen, it's an enormous market. It's an enormous country. You know, all you have to do is switch China for the U.S. and say, you know, how many times have we had a conversation, you and I, about what do you feel of the prospects for the U.S. consumer? Well, the Chinese consumer is going to continue to consume. And if some of these Chinese policies gain some traction, you may actually end up with more disposable income in the hands of those Chinese consumers. I mean, look, if you're spending however much it is for private tutoring, and all of a sudden the country said, no, that's a nonprofit business, everybody should have access to tutoring, that's a little extra money in your pocket.
Yeah. Arnie, a lot of U.S. investors write to me, and they're interested in investing overseas in bond markets, particularly high yield. Just like here in the U.S., they're reaching for yield. There are emerging market high yield funds that are out there. Right now, we don't see any particular contagion. Is there any thoughts that your company or organization has on how to approach this? I'm talking about international U.S. investors who are going overseas, buying into emerging market high yield funds, for example. And there is a concern here about a contagion associated with that at all. Any thoughts on that?
Yes, and in fact, I'm going to borrow a page out of Dan's book when it comes to active management. I would want to say, with regards to China equity indices in particular, as we said before, they are very investable. I'm very much a proponent of ETF-based investments there. However, when we look at emerging market high-yield bonds in particular, it is a very valid statement to say, hey, do I not want to look at an active manager? Because there's several risk factors when it comes to fixed income that don't necessarily make the front page, so to speak, such as foreign exchange. If I buy a non-dollar denominated bond, then I no longer have a fixed income instrument, but I have a variable income instrument because all of my coupon payments as well as the principal repayment are subject to FX risk. On top of this, you have different jurisdictions in terms of the legislation that underlies those bonds. All of those relatively nuanced details for me are very relevant from a US standpoint to say, hey, if this is a segment that interests me, why don't I look at an active manager? However, I do want to very clearly state that in Chinese equity case, we're very much a proponent of ETF-based investment there.
Yeah. And Arnie, just on a separate subject, I know value guys out there, and they have a very laissez-faire attitude about all of these fundamentals. We're talking about regulatory risk or bank risk. They don't care. They buy China when it's cheap. So it's when it's under, I'm picking a number, 15 times forward earnings, they buy. And then they sell or they walk away when it's higher than that. Is that an equally valid way to play China at all on the technicals?
I would say it can pay off. It can be a little bit dangerous too, though, because as we stated before, Bob, the regulatory risks in China are somewhat heightened, as proven by the current situation and by essentially the different scenarios we discussed on this call alone. So looking at the underlying fundamentals, looking at the analytics alone might not be sufficient. We would very much encourage you to work with an asset manager or with essentially a partner that, as Dan was saying, has boots on the ground to get a good understanding and a good feel for what are essentially risks that may not necessarily be priced in, or what might be a little bit of a forward-looking sentiment around those.
Yeah, I think so. Dan, you in agreement with that? I mean, obviously, your business is not technical analysis, but you get my point. There are guys who don't particularly care about all of the fundamentals. They're just looking for it when it gets cheap.
Right, and those same guys are trading in and out, and by the time they make some money, if they make some money, they're going to give half of it back to the IRS. So, I'm loath to recommend a trading philosophy when you can be a long-term investor and make an awful lot of money in this market. And, I think Arnie's exactly right. Bob, you like Vanguard a lot, and I cover Vanguard. Vanguard's actively managed emerging markets bond index this year alone is doing quite a lot better and has done quite a lot better than its emerging markets bond index fund. The active fund has done better than the index fund.
Yeah, this year, for sure.